When people think about market crashes, they picture chaos. They imagine headlines screaming collapse, markets falling faster than anyone can react, and ordinary people watching their savings evaporate in real time. They imagine fear, confusion, and defeat. But history tells a very different story, one that only a small fraction of people ever understand. Because every major crash in history has also marked the beginning of the greatest wealth transfers the world has ever seen. Not just recovery, not just rebuilding, transformation. The truth is simple. Crashes don't destroy wealth. They redistribute it. From those who panic to those who prepare. From those who follow emotion to those who follow strategy. Those who recognize this pattern didn't just survive past collapses, they came out of them wealthier than they ever dreamed possible. After the crash of 1929, as most of the world fell into despair, a handful of investors quietly purchased world-class businesses for pennies on the dollar. The returns that followed weren't measured in percentages. They were measured in lifetimes of wealth. A factory bought for the price of scrap metal became the anchor of a fortune. A railroad purchase during panic grew into a dynasty. While the world mourned, a few understood the moment. When the dot-com bubble burst in 2000, most ran from the market. But patient investors who studied real value instead of hype acquired companies that would dominate the next 20 years of the digital economy. Amazon at $6 a share. Microsoft when people said it was finished. Apple when Wall Street laughed at the idea of the iPod changing anything. Netflix when it was just a mail-order DVD company. In 2008, while fear flooded every corner of the global market, the greatest accumulation of real assets in modern history began. Homes, land, businesses, stocks, sold in desperation, bought quietly by those who understood that panic is temporary, but value is permanent. The result was the longest and most powerful bull market America has ever experienced. Now we are standing on the edge of that moment again. Not a dip, not a correction, a reset. Every warning signal that matters is flashing at the same time. Debt at historic extremes. Asset valuations detached from fundamentals. Central banks stretched to their limits. Consumer credit maxed out. Speculation disguised as innovation. Confidence built on debt instead of productivity. And this time, the scale is global. But the masses don't see it. Not yet. They're living inside the illusion of stability. They think growth will continue because it has for so long. They believe the system is strong simply because it hasn't broken yet. But history teaches something different. The breaking point always comes, and it always comes when most people stop expecting it. Right now, economists and media voices are telling everyone not to worry. They say unemployment is low. They say markets are resilient. They say the economy is strong. They always say these things right before the fall. They said the same in 1929. They said the same in 2000. They said the same in 2007, and they were catastrophically wrong. Meanwhile, the people who actually understand this system are quietly preparing. Not loudly, not dramatically, quietly. Warren Buffett's company, Berkshire Hathaway, is holding more cash than at any point in its history. Hedge funds are rotating out of hype and into value. Global investment banks are shifting their models to stress test inflation and systemic shock. Nations are accumulating gold at rates not seen since World War II. The smartest capital in the world is not celebrating this market. It is preparing for what comes after it. And here is the truth, most people never learn in time. The opportunity isn't in the crash itself. The opportunity is in being ready for it. Because when markets crash, three things always happen at once. 1. Overvalued assets collapse to realistic prices. Stocks, real estate, and businesses that were priced for perfection return to sanity. This creates the chance to buy quality at a discount that only appears once every 15 to 20 years. 2. Leverage becomes a weapon against those who carry debt. People and companies who borrowed aggressively are forced to sell at the worst possible time. Their loss becomes someone else's foundation of generational wealth. 3. Liquidity becomes the most powerful tool in the world. Cash isn't about safety, it's about optionality. When everyone else is forced to sell, the person with cash controls the game. This is why the wealthiest people are not panicking. They are waiting. They are watching. They are preparing. They understand that markets don't move in straight lines. They move in cycles. And these cycles are as old as modern finance itself. Boom. Excess. Instability. Collapse. Transfer. Recovery. Expansion. We are at the end of the excess phase. The instability is visible. The collapse phase is approaching. But the transfer phase, the moment when fortunes change hands, that is the moment that decides everything. That moment does not reward intelligence, it rewards preparedness. It rewards the person who understands that fear is temporary, but assets are permanent. The person who understands that prices may fall, but value remains. The person who understands that the panic of the crowd is the opportunity of the few. We are moving toward 2026 not as a random date, but as the mathematical result of a system pushed beyond its limits. The cycles of debt, interest, speculation, and productivity are converging. The pressure is building. The question is not, will there be a reset? The question is, who will be positioned to benefit when it happens? Because the reset doesn't decide your future. Your preparation does. And the people who understand what's coming aren't trying to predict the exact day or the exact month. They're preparing long before the crowd realizes the moment has arrived. This is where the transfer begins. The cycle we are entering is not new. It is simply larger, more global, and more interconnected than any before it. To understand what is coming, you have to look beneath the surface, beyond headlines, beyond political speeches, beyond the illusion of stability that most people cling to. Because beneath the surface, something much more mathematical is happening. Debt has been building for decades. Not just personal debt or corporate debt, but entire nations have leveraged their futures on the assumption that growth will always continue. But growth has limits. Productivity has limits. Resource supply has limits. Human psychology has limits. When debt rises faster than real value, the system becomes fragile. When credit becomes the foundation instead of production, the economy begins to rely on promises instead of results. And promises cannot withstand pressure. This is where we are today. Households are stretched. Corporations are stretched. Governments are stretched beyond anything seen in economic history. Yet instead of confronting this reality, the world has responded with denial. More loans, more printing, more stimulus, more expansion of credit. This creates the illusion of prosperity, but only temporarily. Eventually, the debt must be paid, restructured, or destroyed, either by default or by inflation. And both of those outcomes trigger the same result. Wealth moves. Ownership changes hands. Power shifts. The wealthy understand this. They have seen it before. They know that during times of crisis, assets do not disappear. They simply change owners. Stocks don't vanish. Homes don't vanish. Land does not evaporate. Businesses do not disappear into thin air. They are transferred from those who are forced to sell to those who are prepared to buy. This is the essence of every wealth transfer in history. Those who panic, lose. Those who prepare, win. Those who understand the cycle shape the future. But preparation requires clarity, and clarity requires stepping away from the emotional reactions that drive most financial decisions. When markets are rising, most people believe the good times will last forever. They increase spending, they take on debt, they chase the next hot investment, they confuse luck for skill and speculation for strategy. And when the crash comes, the psychological shift is immediate and brutal. Confidence collapses. Optimism becomes fear. Every decision becomes reactive. The survival instinct takes over. People sell not because they want to, but because they feel they must. Fear makes prices collapse, but value remains. This is where the opportunity exists. To benefit from this moment, you must learn to see markets the way the wealthy do. Not through emotion, but through cycles, structure, and timing. The first part of positioning yourself is understanding that cash is not just money. Cash is potential energy. When markets are inflated, cash looks weak. It earns little. It seems slow. But during crisis, cash becomes one of the most powerful forces in the world. It allows you to choose. It allows you to act. It allows you to buy when others have no choice but to sell. But simply holding cash is not enough. You must also know where to deploy it and when. Because during a crash, everything drops. But not everything comes back. Some companies will disappear, some real estate will never recover, some industries will shrink permanently. Entire sectors that existed during the boom will become irrelevant during the reset. This is why understanding value is essential. Value is not price. Value is usefulness. Value is necessity. Value is resilience. A company that provides real products or services, that has healthy cash flow, strong leadership, and low debt will survive the crash and grow stronger during the recovery. Not because of luck, but because it solves real problems. But companies built on hype, speculation, or momentum, they collapse when the narrative breaks. The same principle applies to real estate. Not all real estate will collapse, but not all will recover. Location matters, demand matters, function matters, scarcity matters. A home in a stable, economically active area with long-term growth drivers will recover. An overbuilt condo in a speculative market driven by borrowed money may never return to previous values. And then there is gold and precious metals. They do not create wealth. They preserve it. They are a shield, not a sword. They protect purchasing power when currency loses credibility. But protection is not the same as opportunity. The real opportunity comes from knowing when fear has reached its peak. Because the moment fear is strongest is the moment value is greatest. This is the hardest moment to act. It is the moment when your instincts will tell you to run. It is the moment when everything feels uncertain. It is the moment when your mind will whisper, wait, just wait a little longer. And that is why most people miss the opportunity of a lifetime. Because the greatest opportunities do not announce themselves. They arrive disguised as disaster. To benefit from what is coming, you must be capable of stepping outside the emotional current of the crowd. You must be willing to think differently, to move differently, to act differently. You must be willing to look at collapse and see foundation, to look at fear and see advantage, to look at crisis and see rebirth. The reset that is approaching is not the end. It is the beginning of a new financial era, a new distribution of wealth, a new hierarchy of power. The question that matters is not whether the crash is coming. The question that matters is, who will you be when it arrives? The one forced to sell or the one prepared to buy? To understand how to position yourself before the reset, you need to see how wealth actually behaves during crisis. It does not disappear. It migrates. It flows through the economy, the same way water flows through a landscape, seeking the lowest, most stable ground. When confidence dries up, wealth doesn't stay where it was. It moves to the hands of those who saw the storm coming. This shift begins slowly, then accelerates suddenly. At first, people feel discomfort but ignore it. They notice prices rising but assume it's temporary. They feel the strain of debt, but they believe they will catch up eventually. Until one day something breaks. Not always publicly, not always dramatically, but quietly. A bank freezing withdrawals. A government announcing emergency measures. A company everyone trusted revealing losses they hid for years. And that is when behavior changes. People stop spending, then they stop investing, then they start selling. Once selling begins, it feeds on itself. Not because the assets have no value, but because the people holding them are no longer able to carry them. They are over-leveraged. They borrowed to buy. They depended on rising prices to stay afloat. When prices fall, their balance sheets collapse. This is why debt becomes the accelerant in every financial fire. The average person believes debt is simply a tool, a way to buy more now and pay later. But during a downturn, debt becomes a trap. Mortgage payments continue even when income falls. Business loans continue even when customers disappear. Credit card interest compounds even when expenses rise. Debt converts uncertainty into inevitability. It forces liquidation. Those who owe lose. Those who own gain. This is the fundamental law of every crash. To prepare, you must do two things simultaneously. Lower your vulnerability and increase your opportunity. Lowering vulnerability means reducing dependency on borrowed money. It means shifting from a lifestyle based on expectations to one based on sustainability. It means removing anything that can force your hand during crisis, because forced decisions are always destructive. Increasing opportunity means holding liquidity, not as idle savings, but as strategic ammunition. It means studying markets, sectors, and assets now before the panic arrives, so you know exactly what to do when others don't know where to turn. Crisis does not care about good intentions. It rewards those with preparation and clarity. But clarity requires understanding where the real strength will exist after the reset. The economy that emerges on the other side of the crash will not look like the one we have now. Some industries will shrink or vanish entirely. Some technologies will accelerate far faster than expected. Some forms of work will become obsolete, while others become essential. To position yourself, you must see the next economy, while the world is still focused on the current one. There are three types of sectors that historically survive and expand after resets. 1. Essential needs: food, energy, water, transportation, healthcare. No matter what financial system exists, these are non-negotiable. 2. Infrastructure and innovation. Companies that solve real-world problems, improve productivity, or enable new forms of efficiency. 3. Stability and store of value assets, commodities, critical resources, and durable real assets. These are not speculative ideas. They are the backbone of functioning society. Even during crisis, people still eat. They still need heating. They still require water, medicine, transportation, communication, and security. These sectors never disappear. They merely shift ownership. But more important than which sectors survive is how opportunities emerge. During crisis, strong businesses gain power, not because they want to, but because they can. When weaker competitors fail, market share consolidates. When borrowing becomes difficult, companies with cash can acquire assets at fractions of their previous value. When consumers become more selective, businesses with real utility outperform those built on convenience or novelty. This is why quality matters more than hype. This is why fundamentals matter more than trends. Trends fade when money tightens. Fundamentals harden. And the individuals who understand this will not simply preserve their wealth, they will multiply it. But the multiplication does not happen during the crash. It happens in the recovery that follows. The crash is the transfer. The recovery is the acceleration. The difference between those who gain and those who lose is that the winners are already positioned before the crisis begins. They are not reacting to events. They are executing a strategy they prepared when everything still looks stable. To do this, you must develop a mindset most people will never embrace. The mindset of strategic patience. Patience to wait while others rush. Patience to study while others celebrate. Patience to prepare while others assume nothing will change. When the crash arrives, the opportunity will not feel like opportunity. It will feel like fear. It will feel uncertain. It will look like the world is breaking. That is precisely why most people miss it. Because the greatest opportunities are never wrapped in comfort. They are wrapped in chaos. The investors who bought during the depths of the Great Depression did not feel confident. They felt alone. The investors who bought real estate in 2009 weren't praised. They were mocked. The investors who bought Amazon at $6 were told it was finished. Every great wealth move in history looked like madness when it happened, and genius only in hindsight. The next reset will create the same dynamic. Most will retreat. A few will advance. Most will freeze. A few will act. And the difference will define entire lifetimes. Because the reset isn't just financial, it's psychological. It separates those who follow the world from those who shape it. The world is entering a moment where discipline matters more than excitement, where intelligence matters less than resilience, where preparation outperforms prediction. Those who survive the reset will live normally. Those who capitalize on it will live differently, generationally differently. What comes next is not just about assets or strategies, it is about identity. Because the reset will not only test portfolios, it will test people. When the world shifts, the question becomes, do you move with intention or do you get moved by force? Most people will wait for permission. They will wait for a signal. They will wait for validation that it is safe to act. But by the time it feels safe, the moment will be gone. Wealth moves in silence, not in headlines. By the time the news reports the crash, the transfer will already be underway. This is why preparation must happen now. While the majority still believes the system is stable, Preparation begins with clarity. Clarity about what matters. Clarity about what is real. Clarity about what endures. Because when everything around you becomes uncertain, the only reliable foundation is your own ability to make decisions without fear. To develop that clarity, you must shift from reacting to conditions to anticipating them. That means learning to read economic cycles instead of headlines, understanding value without needing approval from others, building emotional distance from market noise, strengthening your financial base so no shock can force your hand. This is more than strategy, it is discipline. Discipline to save when others spend. Discipline to hold when others chase. Discipline to act when others hesitate. And discipline is not built in crisis. It is built now, while the system is still functioning, while markets are still elevated, while time is still available. Because when the moment arrives, you will not have time to build discipline. You will only have time to use it. The next shift will not reward the loud. It will not reward the impulsive. It will not reward the emotional. It will reward the one who prepared quietly, the one who preserved optionality, the one who refused to be rushed by the crowd. When the crash comes, most will look around and ask, what do we do now? They will seek instructions. They will seek leaders. They will seek reassurance. But the answers will not come from outside. They will come from the strategy you built before the world changed. Because once the panic starts, the window of calm decision-making closes quickly. This is why the wealthy always seem to know when to act. It is not that they have secret knowledge. It is that they plan before the world asks the question. The difference between fear and power is preparation. And the most powerful form of preparation is knowing exactly what you will buy when the time comes. Not guessing, not rushing, not reacting, knowing. Knowing which companies have strong balance sheets and real demand. Knowing which real estate markets have long-term growth drivers, not hype. Knowing which commodities hold purchasing power when currency weakens. Knowing where your capital will earn and where it will decay. Because the crash does not create opportunity. It reveals it, and when the fog of panic clears, you will see something very clearly. The world did not end. It reorganized. The individuals who emerge wealthy on the other side will not be the ones who avoided risk. They will be the ones who understood it. Risk is not the possibility of loss. Risk is the possibility of being forced into decisions you did not choose. When you reduce your dependence on debt, your risk decreases. When you increase your liquidity, your risk decreases. When you understand the value of what you own, your risk decreases. When you know your plan before the crisis hits, your risk decreases. Suddenly, the crash is not a threat. It is an opening to acquire assets that were previously unreachable. An opening to reposition your life toward freedom instead of survival. An opening to step out of the financial gravity that holds most people down. This is why the greatest fortunes ever recorded were born in the aftermath of crisis, not in periods of calm, not in periods of easy growth, but in moments when the world seemed to be breaking. Because crisis exposes the truth. It reveals which systems were real and which were illusions. It reveals which wealth was built on production and which was built on speculation. It reveals who was disciplined and who was dependent. And once revealed, the world does not return to what it was before. It evolves. The question is whether you evolve with it. There will be fear. That is certain. There will be confusion. That is certain. There will be voices telling you to wait, to hesitate, to retreat. But there will also be a moment, a quiet one, when the noise fades for just long enough for you to see the opportunity clearly. When prices are low, when assets are available, when the world is still frozen, when action feels impossible. That is the moment when the wealth transfer becomes real, not because of luck, not because of privilege, but because of preparation. Because while the world slept, you learned. While the world borrowed, you saved. While the world chased, you observed. While the world panicked, you breathed. This is how legacies begin. This is how dynasties begin. This is how financial histories change. The reset is not the end. It is the opening. The greatest wealth transfer of your lifetime is not something to fear. It is something to prepare for. Because when the system resets, the world will not ask whether you are ready. It will simply move, and those who understood the moment will move with it. If you're ready, comment, I'm prepared.